Hey everyone, this is the Trader Investor. I want to do an analysis of the markets today by looking at the daily first. The reason why I want to look at the daily is because of SAVE, Structure, Area of Value, Execute. And we are at a structure point where we still have an intact uptrend. That structure is still not broken, but we are testing that structure right now and we can come to an area of value. What is my area of value right now is this trend line. So yesterday we came and touched that trend line, and today it looks like we want to reverse that. So far it's an inside day so far, but we have yet to see what the markets would do. So this is why I want to start off with the daily. That structure is still intact. And let's quickly look at all the structures for our broader markets, Qs, IWM, Diamond, SPYs. So in the Qs, that structure is broken and we're going into a sideways action right now. So we broke it down. It looks like we made a kind of a higher low, and we're making a higher high. Fantastic. And we are not making a lower low, which is great, but because price came down here, but price came down to this order block. So for me, I think that there's still some room to the downside. I still think that this order block could potentially get fully mitigated before we reverse. It is not a must, because as soon as we're inside this order block, it is considered mitigated already. A lot of times though, what I see is price will touch it, come back for a little bit, and then fully come inside it, and then give us a break of structure and an entry. This is what I see a lot of times. So as a result, I want to be more cautious, and I want to just wait for what price does around this area. If that doesn't happen, if all price wants to do is say, I have given you a trend line here, I've touched it, so price is going to go up, not fully come back to it and want to reverse, that's also perfectly fine, and I will execute based on that analysis. But for now, what I am seeing is we are near an area of value, this order block, away from trend lines. I want to see what it does around there. So IWM has been going in sideways action. I have said a couple of times, do we have terminal shakeout? And it looks like we don't have it there yet. Could it be here? So I'm going to keep moving terminal shakeout until it is done. And what do I mean by it is done? There are two things that will happen. Price will drive up, come back, maybe test it, but not that low, drive out and drive out of the test area, and then come back to test that test area and reverse. So this would be a confirmation that this is a reaccumulation and we are done with that reaccumulation. For now, that doesn't appear to be the case. For now, it is probably trapping some to make them feel that this could be a distribution. If it's a distribution, what happens is you get up here, you get upthrust after distribution, UTAD, that's what you get up here. And then price is now then, if it has broken, if it breaks these areas and then comes back, tests that and go further down. This is another possibility if this is a distribution area. Because we have an order block down here and another few order blocks down here, that is something that we need to be mindful of and make sure that we're watching for that. But for now, this is how I'm looking at IWM. Diamonds, strong uptrend, continued strong uptrend in the diamond. We're at the upper bound of the previous uptrend that has slightly changed, and that uptrend, now we have a new uptrend as well up here that we can mark here as an uptrend boundary. And as we look at that boundary, price touches it, comes back to test the lower part of our previously marked trend line, and now we want to see again a break of structure to resume this uptrend. Of course, I'm not going to look at the daily for break of structure. The daily is the overall analysis. What is the market doing? And right now we don't need to go to weekly and monthly because we still see the daily intact. The daily is not broken, which inadvertently says weekly and monthly are still intact. So daily is intact, monthly, weekly still intact, daily not broken. So now let's go to our hourly, because that's where the interesting action comes. So when we change to our hourly chart, what we want to see is prices come down, tested these, and a few weeks ago I did mention that there are a couple of gaps that I wanted the market to close. There was this gap that market took care of, and then there's another gap here in the 402 area that I am watching. That gap is also an imbalance. I'm watching for that gap before we say, oh yeah, we're definitely resuming the uptrend. We are not there yet because this gap is still in play. There's a further gap down here that is still in play, and we have some hourly order blocks still in play. There's a daily order block way down here in the 395 area. I'm not expecting for that to be taken care of anytime soon. It will at some point when markets have a heavy pullback, but for now that's not the case. So what I'm looking at is on the hourly. This is not day trading, right? This is looking at the broader market, how they're doing. We had a very strong pullback. From that pullback, we are making a new high, but we are still have not negotiated these highs yet. So that's one sign that the structure is not yet broken. Now what could happen is if we get a move down sometimes in the next couple of days, or it could even be today, and we make a new higher high by keeping a new higher low, then we can say we have a break of structure to resume, and we will have a headwind around these highs. First sign of trouble, this highs, this imbalance, this hourly order block within imbalance. So all of this is space that can get taken care of, and we will be mindful of that as we enter positions. But for now, there is no break of structure. We are just having a rally within a pullback. This is how I see it. A pullback, a rally within that pullback. We have yet to confirm if we are out of the woods yet. And if we look at the rest of the markets, if we look at the Qs as well, pullback, we have a rally within the pullback. We have not broken these highs. We have not broken structure yet. We are at the area of value, this daily order block. This is a daily order block, so it's significant. So what I want to see is price to break these highs and maybe make a higher low and resume to this liquidity area, to resume to this imbalance area, or price will fail to do that and price will reverse back in here and mitigate this completely and then give us that break of structure. So there's a couple of possibilities, and we're not rushing. We're just waiting to take advantage of them, because what you are seeing here, if I zoom out a little bit, or I always get confused, zoom out, zoom in, which way is which, but anyway, let's zoom. And as you can see, the first hour of trading was a strong hour, but the next hour is not yet as strong. There's not that rush of big push. Of course, it's just been a few seconds since we opened, but we have yet to see what happens. But that break of structure again needs to happen for us to say we are done of making this pullback. Same thing with IWM, strong pullback at an area of value. This order block touched a couple of days ago, and then it completely closed it yesterday, and now we are resuming, and we are having a short rally within the pullback. Not yet any sign of break of structure. We need to break this. We need to form a higher low and continue up, and we need to break this. There are a few things that we need to see for us to say that pullback is terminated. So not yet for now. It could be on the way. I'm not saying it's not done. I'm not saying we're going back down, but it could be that we're not done yet. If we're not done yet, we still have some room to the downside. We have some liquidities that were left behind that we need to take a look at. So finally, looking at the diamonds, same story all over. Heavy pullback, area of value. We have an imbalance down here that is left hanging. So for me, I'm thinking that we are most likely going to close this imbalance first before we break structure and resume. That is a possibility, but we only trade what we see. We don't trade what we predict. But for now, we have break of structure, meaning we need to break this, or we need to push up and make new higher low, break the highs and push. And keeping in mind, we have this imbalance here that could act as a headwind. We'll look at all of these together as we think of which way the market could be heading. Now, if we come down to our 15 minutes chart and starting with the SPYs on our 15 minutes, what is happening? What is happening is price broke out of the range beautifully today. I did not participate in this because I was late starting my day today. I did not participate in this move, but you have headwind in the 15-minute range of yesterday. The low is already breached. Fantastic. The mid-range is at play, not yet breached, and the high not yet breached. So we want to take a look at that completely. And the red line you see is the low from last week, and that has already been breached. So this is an area again to be mindful of, because yesterday price came down, tested that area to keep going down. So we want to make sure that we are taking care of that area completely before price reverses on us. Since the pullback is not terminated, meaning since we have not seen a break of structure to say this pullback is terminated, we want to be mindful of all these levels. This is the high of yesterday. What are we doing at the high of yesterday? We are way off from the close from yesterday. Great. But is this an inside day having a hard time to penetrate here? Because if we get railroad tracks here, I'm entering shorts immediately. If we get railroad tracks at this level or somewhere here at this level, the market is saying, I'm not done pulling back. I'm just giving you a short rally. And I'm going to enter. And if I'm wrong because I have tight stops. But I'm seeing that this could be a very strong headwind. Of course, you need to wait for this manipulation to happen. Manipulation is always the fake breakout traders, then reverse it, take short traders, then reverse it for a while, and then resume the real downtrend. Or it doesn't want to do that. It wants to completely break, but fake breakout traders, reverse it, take some short traders, reverse it, and then test this area and boom, go. So these two are possibilities. So we trade what we see. We don't trade what we want to see. So let's just wait. Let's just wait and get that confirmation. And you get a very good pin bar here. If this bar is like this and we close down here and we close down here like this, this is a very good indication that this is a strong area where price could potentially reverse. So let's be mindful of that. Let's be careful as we trade. Let's not rush to say, oh yeah, it's going to keep going up. And even though I missed this trade, if you have taken it, it was great. 409.13 to 410.93, almost a $1.80 move. This is acceptable, right? I said a dollar move, and if it turns at halfway, that's fine. But it gave us a good move if you had taken this trade. But I was not in front of my charts, so I missed this trade. But that's all right. That's what happens. Qs. Now Qs, it's another interesting portion. So we're near that area of value. Now the thing with Qs, even though it broke the high, this is not a good trade to take because your headwind is the high of the 15-minute range of yesterday is the high of yesterday. And if you look at the distance from here to here, the total distance is $1.22. And are you willing to take a risk on $1.22? And if you measure then from here to here is $1.10. So are you willing to take that risk? This is for me, because I say $1. You might say, well, you already say $1, I'm taking it. That's fine. But if you can see, we did not even get up to that value. The range of this bar is $1.30, but it started down here. So, did you take a chance and take it, or did you wait? And for me, what I want to see in the Qs, I want to see this high breached, tested, and resume, enter here, right? This is what I want to see. We have the low of last week again as headwind from here, 324 to 326. It gives us enough room. I want to see that happen before we are heading north. That's at least that's how I'm looking at it. IWM, look where price is stalling. It gave us a pin bar right at the 15-minute range low of yesterday. This is why I say be careful. But 215.41 to 216.74, $1 and change. You could take it. It's within our acceptable range, but you have tight stops. You take it, and it would have been a good entry. Target 1 will be reached, and your target 2 is probably near being stopped out if you have not moved it up yet. But that is how you play it. Diamonds, if you had entered diamonds 338.61 to 341, this would have been the better play because you had lots of room. Even if the 15-minute range low of yesterday acts as a strong resistance, you've already captured some good gains here. This was the play for today. So this is how I'm looking at the market. I have missed a couple of entries, diamonds and spies, but I'm now patiently waiting to see if I get another re-entry. A re-entry possibility in the 15-minute range. A re-entry could be we get a short pullback and we rally, right? That's a possibility. Or we get, let me erase the rally part. We after that pullback, we test those highs and we have a breakdown, because overall, as I mentioned earlier, we are not out of the woods yet. It has not said I am done the pullback. The pullback is still intact until we have break of structure. Break of structure in the hourly. I am not seeing break of structure yet, so meaning I need to break these areas, or I need to do this and do this. And this high of yesterday is in the way. I need to take care of that. The imbalance is in the way. I need to take care of that. But for day trading, that's fine because that's quite some distance. We do one step at a time, take care of each, and keep moving up. So this is how the markets are setting up. I will come back and do an analysis at the end of the day. Don't forget to like this video. Don't forget to keep encouraging me. And if you have any questions, if you need any support, please reach out, because I want to make sure that you're getting everything that you need to be able to analyze these charts the way that is profitable for you. Consistently profitable. Trade by trade, we don't care. Week by week, we care. Month by month, year by year is what we care. So let me help you read your charts precisely and more accurately. Don't forget to reach out. All right, everyone, take care, and I'll see you in the next.